So Litecoin and the other cryptos have taken a sharp turn downwards, which is causing me to change my perspective to some extent, but that does not mean that we can't still have a bullish setup in place. This is the 1 hour Litecoin chart, and we've been having a lot of strange overlap. We're seeing quite a pullback in the futures, in the equities, accompanying the pullback in cryptos. The cryptos almost move in an exaggerated fashion to the equities. And while there's a correlation right now, this is not always the case, so don't fall in love with that. But again, we're looking at a pretty sharp pullback. Right now, we're down about a little over 2% in Litecoin and still falling, and we haven't invalidated anything yet. We had before, we were looking at as 3 waves up. We invalidated our potential for an impulsive rally because our wave 4 pulled back so deeply, it overlapped the top of our first wave. So by definition, we can't have an impulse up. So that leaves us with, again, the diagonal pattern up with a potential higher high for a 5th wave, and the more bearish alternate pattern in which this is actually a fake out 3-wave bounce, an ABC. And we already have a first wave in place for a deeper C wave that would finish off our overall larger pattern, which we're going to look at momentarily in the big picture. So what we have in place right now is potentially a 2nd wave up. This is certainly deep enough. This purple blue box represents the zone between the 38.2 and the 61.8% retraces. Pretty standard for a 2nd wave most of the time. Now, 2nd waves could retrace as far up as the green line. As long as we don't surpass the green line, this red pattern is very much alive, and we could turn right around and dip real quick right away. We could fall very precipitously at that point. However, if we do break this green line, the red downside pattern is dead. At least the immediate downside is dead, because that would invalidate the downside, and we would also have 5 up. And if we do break the green pattern, I would actually expect us to exceed it by quite a bit. That would be a very clear and bullish sign. And I would hope to see the same thing in the equity space, S&P 500, the Dow, the Russell. But if we can't, then we'll have to start taking this red pattern more seriously. What would I expect in the red pattern? Well, I was expecting a bounce in that blue box and a sharp downward movement to take us into the bottom of our 3rd wave. And while I don't want to say that this is it, it very well could be. If you look at Litecoin in isolation, we have had a sufficiently deep 2nd wave up, and we may already be in our 3rd wave down. The reason why I'm hesitant to declare that as official is that we're not seeing the same kind of thing in Bitcoin, Ethereum. Bitcoin, we didn't really have as much of a rally, but we have certainly not gone, we haven't bounced deeply enough for this to be a 2nd wave. Ethereum is similar, in which there's really no semblance of a 2nd wave. Nothing here is quite deep enough to be considered a 2nd wave. If I put my fib tool onto here and measure the retrace, barely 30.2%, not quite. And if I look at Dash, which often leads the other coins, we're nowhere near having a 30.2% retrace off that bottom. So right now, I'm not fully convinced that this is a 2nd wave bounce, what we were calling for a gentleman's exit in other coins. So right now, my best guess is that this is an ABC up. We're probably in some kind of a B wave down. B waves could actually retrace beyond the initial origin of the A wave, and we would have one more rally into the box, deeper in the box, very likely past the box. And that is if we have a downside setup. Assuming we do get that 2nd wave bounce, our 3rd wave is projecting well below $90. It's once we pass the support at 91.55, that is when, well, you could put your bear pants on, basically. That would invalidate the immediate upside setup. So that would invalidate this upside diagonal pattern, and it would make the red alternate pattern my official primary count, which we'll look at in a second. And well, we'd have a 5-wave move, presumably all the way down. And again, it's not official until we hit 91.55. Until that happens, yellow, green, blue, whatever you want to call it, is still my primary. I still don't see the red as my primary. So the long-awaited big picture chart, our divergences are still very much in place for the MACD, the MACD, and we have no reason to think that we've done anything other than bottom recently, even though the latest action is giving us reason to pause and be more hesitant to get that confident. Our purple and green are more or less primary. They're both bullish patterns. The only difference is the way the structure will unfold, which will not be apparent for quite a while. So the purple primary is calling for a diagonal pattern up, in which you have 3-wave zigzag ABC patterns the whole way up, while the green pattern would call for an impulsive rally, and they would not be distinct from each other. You couldn't distinguish them until we got the 3rd wave. Well, the third would blast right through this resistance box. That would be our clear sign that's a green impulsive structure. So again, for all our intents and purposes, there's no difference. These are both the bull pattern. The red pattern is, of course, the bearish pattern that has never left our charts. It was on there for a reason. And I've been saying the same thing. We have a clear 3-wave rally up. And until we have a clear 5-wave impulse, we can't take the red pattern off. But as I mentioned, if we do surpass 134.19, which was the peak we hit on March 30th, that would immediately kill the downside setup and would make it very unlikely we have that lower low after all. If we do get that lower low, we did take the closer look on the big picture. We probably land somewhere between 68 to 60, the low $60 range, something like that. And that does more or less match what you see here with this pink red box here. That is where you'd expect our deeper red pattern to actually unfold, the deeper fourth wave. That's what I was calling it. It's a fourth or a second. I think it was a fourth is what I was considering this to be. If it's green pattern, it could be a second. Either way, I would expect to be a very quick, sharp pullback, which is much like what we've seen in the past. We saw that in the middle of the summer, right after our big blow off high in May, very quick spike down. Then we bounced pretty quickly. And all the subsequent pullbacks have been very similar. They just look like long red, short-lived candles that spike down, and then you have an immediate reversal. So how you should attack this strategy and tactic wise is, well, it depends on your own personal philosophy on investing, what your strategy is, what your risk tolerances are. For a lot of you guys, it may make sense just to hodl, just to hold through this correction, because sometimes not sometimes, it's often hard to time the bottom and the top. Get out before a bottom hits and then buy at the bottom. For others, including myself, I do speak for myself here, I will very likely take some profits, take some coins off the table. So maybe drop down to maybe drop 30 to 50% of my allocation if we get that bigger bounce. If this thing just crashes right down, may not be worth the chase. But again, if we get that gentleman's exit, if we get a slow, the slow pitch tossed up at us, could be a good one to take a whack at, take some of that off the table. So there you have it. Until again we break 91.55, we are not. Well, I'm not shifting to the red pair as my alternate. If that does happen, I would expect a relatively quick and sharp pullback into this red peach box before we start our actual rally for reals. Otherwise, if we get that fifth wave higher, I would expect a pretty sharp retrace for our larger second wave, and then we'd be off to the races at that point. One more point that I would like to make that I've mentioned before in this video and others is that if we are following purple, this may be a very ugly, choppy mess going all the way up, because it would be a non-standard corrective pattern. You'd see a lot of ABCs that are recursive. You wouldn't see a clear 5-wave pattern, at least until we got past this B wave. Once we get to the bottom of this B wave / second wave, we'd fully expect to see a 5-wave impulse into this box. That would be characteristic of a C wave. C waves are always 5-wave patterns, almost always. And if we blast their box again, that would be the bullish green pattern. So there you have it. Our lines are clearly marked in the sand. So stay tuned, subscribe so that you don't miss any updates. And where the other cryptos go, Litecoin should go as well. So even if I don't put out a Litecoin video, you can infer and extrapolate from the other updates I do. So don't forget to give me a like. Until next time, thank you for watching and happy trading.